Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And I have some information on the chart that I want to point out that will help you with forecasting the market for next week, which, by the way, is a holiday week. Friday, the markets will be closed, and there will only be 4 trading days next week. And in addition to that, options expiration will take place on Thursday as the monthly options for April come off the board. Now, why does that matter when we are forecasting the markets? Because when you have a shortened trading week, the traders tend to jam in more of that activity in a shorter period of time. That's number one. Number two, options do have an effect on the price of individual stocks in the overall market. So it's going to be an interesting week next week. As you can see from my chart, the lines that were drawn last week are left on the chart so you can see how accurate the forecast was. Last Friday, I said that we would most likely pull back to the 20-period moving average, and you can see the diamonds did that within a couple of pennies. And then today, right here, which is the 12th of April, we bounced. And not only did we bounce, we gapped up. Now, that's important. But first, let me point your attention down here to the oscillators. As I zoom in a little bit more, you'll see that last week I also forecasted that the stochastic would pull back and cross, and it did just that. I also said that the CCI would pull back. It did just that. And now we have the stochastics %K and the CCI showing upward momentum. So this is where it's going to get really interesting because today's volume was higher than it was yesterday. It was on a green candle, but we have mixed signals. And the reason is this candle from today, the 12th, is a spinning top. And it's happening right at a resistance point right here. Let me erase these lines to make it clearer for you so you can see that. And what I'm going to do is draw a horizontal flat line right here at resistance. I think that the diamonds could go just a little bit higher just to test that resistance. And then I think later in the shortened trading week, we're going to pull back just like we did this week. And I think this gap is going to fill. I think the stochastic is going to go up a little bit and then start to pull back just like that. And I think ultimately the CCI will pull back, giving us a sell indication later in the week. Now, support for the general market here is going to be right around the lows, right around 255 for the diamonds, right there. And we are more or less stuck in a trading range right here. So that's my forecast for next week. Before I go to the Russell 2000, I want to look at the VIX. The volatility index is a leading indicator, and as you can see, again, I left my lines on the chart. I said the VIX would most likely go up, the end of that line being my target. It did that. Now, again, keep in mind, the volatility index is inversely related to the S&P. So if this VIX is going up, the S&P is expected to go down, and it did that. And then what happened later in the week, the volatility index dropped, and we had that rally today, as I mentioned just a little while ago. Now, here's where it gets interesting. If I condense the price action just so I could get the support, I think the VIX is going to drop a little bit more on Monday, and then I think this support level down there is going to hold. So this support is what I'm referring to, and so the stochastics will most likely drop and then start to go up on the VIX, and the CCI will most likely start to move up. Now again, I'm going to be redundant here intentionally. The volatility index is inversely related. So if it goes down early in the week, we're expecting the S&P to go up early in the week. If it goes up later in the week, we're expecting the S&P to drop later in the week. I don't want to confuse you, but that's just the way it works. Hence the reason why the volatility index is a leading indicator. Now I'm going to go right to the Russell 2000. and show you what happened here. I did say that resistance would most likely hold. It did. We pulled back and got within pennies of my support level here, which is the 20-period moving average, and again within pennies of the end of that target, which is the end of the line, and then we bounced. We're going to see more or less the same scenario for the Russell 2000. I'm just going to erase this line to make it clearer again. I think the Russell 2000 will start to move up early in the week and then ultimately pull back just like it did this week. So that's the forecast for the Russell 2000. If we look at the Nasdaq market represented in the Qs, ticker symbol QQQ, the resistance level is still holding. We did not pull back from it yet, but it is still maintaining a level of resistance that we have to pay attention to. So all I'm going to do here is I'm going to move that line over to the right and just draw it just like that. I think the Qs are going to pull back. I think the stochastic is going to pull back and cross with a sell signal. And if you notice right here, the CCI is right on the plus 100 horizontal line right there, which is a sell signal. So I think that's going to continue lower as well as we approach the Easter holiday weekend. So that is our forecast. I hope you're enjoying these reports. They are very accurate. We're not 100% right all the time, but we are right a lot of the time. And if you'd like to learn more about how we do this, just go to the Market Guys website, click on the video tab right there, and you will be brought to a library of videos that we call Market Shots. And you'll learn everything that I'm mentioning over the weeks and on end, and you'll learn the terminology that I use so this becomes more familiar to you. And finally, if you're interested in enrolling in my mentoring program, there is a short waiting list. Just click on the contact button right there, submit your name and email address, and I will personally get back with you. Like I said, we have a short waiting list, but we are sifting for interest to build the summer group, which is going to be here in no time. So that's our weekly market report. Enjoy the trading week, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.